Well, hello, I'm Doug Apple, back with another special interview for you today. Here's the headline. Here's what's really making you poorer. Well, hopefully you're not getting poorer, but you get the point. What is bashing at your budget? That's the headline in the Washington Post. Here's what's really making you poorer. What are they talking about? What is really making us poorer? According to this article, here's their answer. Quote, the price of health insurance. The article says that health insurance premiums have been trending upward for years and are now, quote, rising faster than ever. And the situation is about to get worse, the article says. For 2026, ACA Marketplace insurers have proposed eye-popping new prices. If you thought it was eye-popping before, it's eye-popping now. And we're going to get to talk with Mike Sharman. He's the legal counsel for Share Healthcare. And we're going to dive into this op-ed piece from the Washington Post, Mike. But I want to share one comment that was online below the article. One comment said this: health insurance for my household will now exceed what my monthly mortgage payment is. This is not sustainable. Well, we're in this situation that's unsustainable, but what can we do about it? Well, let's dive a little farther into this and unpack it with Mike Sharman. Mike, tell us about it.
Well, thanks, Doug. And boy, that comment that person made is exactly what we've been talking about on a number of our interviews, that exact point that many people's insurance is more than their mortgage. You know, the people who bought their houses, in 2008, 2009, or before that era, their mortgage definitely would be less now than the average family's insurance across the United States. So the average cost of employer-provided insurance across the United States for a family of four is $2,600. $2,600 at any time other than, what our prices have been since the Biden administration came in, and now we're stuck with those prices. If you had a $2,600 mortgage, you had a palace.
Yeah.
Now you might have a condo or a studio someplace. I mean, prices of housing have gone sky high during the Biden time. But that's a huge reason why Share Healthcare exists. And that's one of the things people can do is begin looking at, well, what can I do to break out of these chains that the monopoly of the government and the oligarchies of healthcare providers, these massive, huge hospital systems, and the very, very large insurers. Those are the oligarchies. And then the monopoly of the government has created this Affordable Care Act, another non sequitur name for a bureaucratic bill. They've created an environment that fosters high prices and stifles competition. So Share Healthcare is a healthcare sharing ministry. And thank you very much, God, that there is a exemption within the Affordable Care Act for healthcare sharing ministries. That means we're able to just slide through this little narrow hallway to get out of the prison of the Affordable Care Act. And why do I phrase it in such, drastic and draconian terms? Well, because the Affordable Care Act mandates to the states what they must do, mandates to the insurers what they must do, and those in turn then mandate to the insured, the families, what they have to do and what they have to pay. And it just creates massive price constraints, massive problems for competition in the marketplace, both at the health provider level and at the health insurance level. So that article you mentioned, Elizabeth Rosenthal has been writing, that author of it, has been writing on the issue of, the extreme price problems and the false pricing problems of health insurance and health provision for quite a long time. And in this current article, she mentions that since 1999, people's health insurance has quadrupled. And she says that from 2023 to 2024 alone, they rose higher than wages and overall inflation, meaning it went up more than what our earnings went up or what the inflation rate for everything else went up. And then she says, but wait, hold on, it's going to get worse. She points out that in 2026, in New York, United Healthcare has asked for a 66.4% increase. They want more than half again what the current premiums are. Now, New York's always at the extreme range of progressive radical ideas, let's say. But the Kaiser Family Foundation, which is one of the largest research and news reporting groups on healthcare, they did they released the results of their survey and their study on 312 different insurers across the nation. And they published it in an article that said how much and why ACA marketplace premiums are going up in 2026. And they found that New York is 3 times worse than the average, but that average is 18% over all of these 312. 18% in 1 year that these are going to be going up. Now, remember, the ACA marketplace premiums are for those that supposedly couldn't afford their own insurance. They're the subsidized ones.
Yeah.
Which is one of the reasons it creates this distortion of free market, because the government subsidizes this and allows a certain increase all the time and allows a amount that the premiums are allowed to have as a profit margin, et cetera. And the higher the premium, the higher they are allowed to have as an administrative cost. So kind of let that sink in. If an insurer increases its premium, it necessarily will have an increase in its administrative cost or its profit. So how does that 18% over all of these 312 insurers across the nation, how does that look compared to last year? It's 3 times higher. Last year was 7%. Well, maybe my math is bad, but nearly 3 times. Last year was 7%, and now it's 18%. Last year it went up 7%. This year it went up 18%, which means 25% higher in just 2 years. So that's what Share Healthcare and a lot of the other healthcare sharing ministries are trying to give people freedom from. You know, Share Healthcare has 3 freedoms that it really is looking to protect. Your medical freedom, that you get to go to any doctor you want to, any licensed medical professional in the world, as long as we get the bills back in English. Any licensed medical professional in the world, and that medical professional is allowed to treat you the way that you and that medical professional decides is appropriate. You know, we as Share Healthcare don't dictate to the provider, oh, you have to do this, you can't do that. No, that's up to you and the doctor. And then financial freedom. Well, this is a pretty obvious one. I mentioned it's $2,600, the average across the United States for an employer-provided premium per month for a family of 4. Well, our monthly share amount for a family of 4 is $349 a month, and then $50 for each child above, family of 4. So you can see there's a huge difference. It's $149 for a single, $249 for a couple, and then that $349 for a family of 4. That's a massive difference. And that person that wrote that comment, well, this is higher than my mortgage. It wouldn't be with Share Healthcare. If you have a mortgage that's $349 a month, you got that in 1932. That's be a really cheap mortgage. And that's the way it's supposed to be, is that our health care for our families should only cost a fraction of what our household costs us. It should only be, really should not even be as high as our grocery bill. And that would probably be true for a family of 4. Their grocery bill would be more than $349 per month, and that's the way it should be. Why is there that huge difference between Share Healthcare and commercial insurance? Well, Elizabeth Rosenthal in that article points out one of the reasons. She said, remember, most insurers in the United States are public for-profit companies. As such, they tend to act in the interest of their shareholders, not the patients whose health care they cover. Well, in fact, they don't even intend to act in the interest of their shareholders. They're legally required to. They have to be looking out for their shareholders as a for-profit company. with shareholders. That's just what the law is. Well, Share Healthcare is a 501c3 nonprofit medical ministry. That's what we are, in a Christian ministry. So those explain those two things. We are a Christian ministry that's a nonprofit. Those things explain in large part why we are so much more affordable. We're nonprofit. We do have administrative costs, but our drive is how can we keep things affordable and workable, sustainable for our members. And then we're Christian. So we try to create a model that is in accordance with the biblical principles that we have. And then we try to have our members be following what the Bible would be telling us for how do we live. Having a good, godly lifestyle. No tobacco, drinking only in moderation. And what's moderation? We actually define that as 2 to 3 drinks per week. I'm a teetotaler, but apparently Christ wasn't. His first miracle was at a wedding, changing water to wine and making it really fine wine. But the Bible over and over and over and over again talks about self-control and not giving oneself to drunkenness. So drinking in moderation. Why does that ban on tobacco and only drinking in moderation, how does that affect pricing? Well, because those two things, having tobacco use of any type, whether it's smoking, vaping, chew, whatever, and alcohol, those two things are the major contributors to pretty much every type of problem that would increase our mortality and our hospitalization rates. So just because we're caring for ourselves more, we will have less medical costs. It just goes that way. And then because our members are Christians, they're praying for themselves and their family. And they're praying for others within Share Healthcare. And prayer does work. And so we have less expenses. We could go on and on about the literal healthcare benefits of being a Christian, but you just look at the price, $349 to $2,600, and that just shows it works.
Yeah, I think of two things, and one is that they're a for-profit corporation, a health insurance company, versus a nonprofit ministry like Share Healthcare. And then the other thing is, it seems like sometimes the health insurance company is trying to be all things to all people, or maybe they're mandated to.
They are mandated to. That's why I was phrasing it in terms of the monopoly of the government. The government tells everyone, all of these insurers, you have to do this, you have to do that, you have to provide coverage for this, you may not exclude that. So that just totally distorts the standard marketplace competition. And then there are disincentives for competition within the Affordable Care Act, and there's incentives for why these entities get larger themselves, thus creating less competition. And there's the incentives for having the prices go up, as I had just mentioned before. The higher the premium, the more the company is allowed to keep.
So what can the average guy do that's listening right now and thinking, well, I'm in that jam. What am I supposed to do about it?
Well, if they're self-employed or employed by somebody who's not providing insurance, then, call Share Healthcare and talk to them and join. If they are with an employer who contributes to their health care, they might tell them, hey, instead of the expensive program you have for us, how about just give me the bonus of $349 per month, and I'll take that, and I'll go get my own Share Healthcare. So those are the immediate things they can do. But then, our First Amendment rights are not only our religious freedom rights and not only our freedom of the press, but also our right to petition the government for redress of our grievances. That's the last line in the First Amendment. So they do need to. They need to, both the state governments and the federal governments affect what the Affordable Care Act does and the pressure they put on insurers as well as hospital systems. So they don't have to tell their legislators a specific thing to do, but tell them, have government get out of this business. Have government focus on looking at ways in which government has distorted the marketplace, and by getting out of that, prices will start coming down. I mean, you and I have both lived in an era when, health insurance was a nice thing to have, but it wasn't terribly expensive if you did have it. Mm-hmm. And if you didn't have it, you'd be able to budget and pay off your medical bill in time.
Mm-hmm.
That is no longer the case. It is definitely the case, like that commenter has said, your health insurance premium now can be, and often is, larger than your mortgage. And the hospital bills are so big, you'll be paying them off for the rest of your life, and then your estate will have to pay them when you die.
One last thing, as an attorney yourself, because one of the things that I see bandied about, and that is, well, one of the reasons it costs so much is because of the liability insurance that the doctors and medical facilities have to have due to these lawsuits giving out gigantic awards. What are your thoughts on that?
That's true. The defensive nature, what's called defensive medicine, is more than just the price of the medical malpractice premium. The medical malpractice premium is a small part of that estimated 17 to 25% of your hospital bill, or whatever healthcare provider bill, that makes up defensive medicine. That means you're asked to do 3 different diagnostic tests when really only one is done, or only one is needed, or maybe not. None of them are really needed. The doctor probably already knows what it needs to do, but he needs the documentation to prove it, so that if there is a problem or somebody just perceives there's a problem and sues them, the doctor has documentation. And I'd written a model legislation that I haven't gotten anybody to pass yet in any state, but it's a model legislation on how we can have no-fault cases like that, so that you don't have to, a doctor doesn't have to prove he was correct. The patient doesn't have to prove they were incorrect. That every time you go to a healthcare provider, whether it's your doctor or a hospital, they put $1 into the vault, let's say, with the state, that is the malpractice fund, so that then if somebody is injured as a result of medical malpractice or medical negligence, they can apply for that, and all they have to prove is that they were injured as a result of medical malpractice or negligence. They don't have to go through the whole rigmarole, which malpractice cases are extremely hard to do, and they're painful on both the doctor and the patient. Now, what's that do about the doctors or hospital systems that repeatedly do malpractice and negligence? Well, because of the insurance aspect, their professional entities have really, they've stopped holding their practitioners strictly accountable for what they've done. It's not at all unusual to find a doctor who has had a series of malpractices before he has any sanction by his licensing body. And then when he does lose a license in one state, he goes to another. I mean, in fact, if you look at the doctors at abortion clinics, that's very much the case, which is why the doctors at most abortion clinics are also working under an alias. I mean, literally. And they're also temp doctors, typically.
All right. Well, if you're listening today and you think that Share Healthcare might help you out of this unsustainable situation, then you can check it out. ShareHealthcare.com is the website. You can find a lot of details there. Or if you want to just talk to a person and have them talk you through it, you can call this number, 1-844-SHARE-HC. For Share Healthcare, 1-844-SHARE-HC. We've been talking with Mike Sharman. He's the legal counsel for Share Healthcare. And for Wave 94, I'm Doug Apple.